So they completely beat consensus across the board. Revenue came in at 805 million, easily clearing the 793 million estimate, and adjusted EPS was $1.05.
Right, against a 97-cent consensus.
Exactly. And management bumped up full year guidance to over 3.2 billion, and the stock just, it reacted violently.
Yeah, up nearly 20% after hours.
Broke right past that 52-week high of $157.
It is a textbook double beat.
It really is. So, welcome to our deep dive on Okta's Q2 fiscal 2027 earnings. We are looking at why a premium identity security product is absolutely crushing it when their biggest rival, Microsoft, is giving away multi-factor authentication for essentially free.
Which normally, that crushes a company.
Oh, yeah.
But Okta is doing the exact opposite, and if you look past those flashy top-line beats, it really comes down to operating leverage.
Right, we're talking about their margins here.
Yeah. Their non-GAAP operating margins surged to 28.1%.
Wow.
And they posted a free cash flow margin of 28%.
Which basically means for every new dollar coming in the door, they are keeping a lot more of it as actual profit.
Exactly. They aren't just burning cash to buy growth anymore.
It's like a gym where more people sign up than you expect, but then all those existing members also start buying these really expensive premium personal training packages.
Oh, that is a great way to put it.
Because your overhead stays the same, but the profit just explodes.
Right, and you can really see that in their contract backlog. Top-line beats make great headlines, but the health of a SaaS company is in the backlog. So if you look at their remaining performance obligations, or RPO, it jumped 17% year over year.
To like $4.85 billion, right?
Yeah, $4.858 billion to be exact.
And RPO, for those following, is just the guaranteed revenue from signed contracts that they expect to recognize over time.
Yeah, and their current RPO, so the money they actually expect to recognize in the next 12 months, that grew 14%.
Which is nearly $2.6 billion.
Exactly. So it's a highly reliable leading indicator. This subscription revenue is not a flash in the pan. It is locked in.
But let's dig into that backlog for a second, because their new products are doing some really heavy lifting here.
Oh, absolutely.
Like 30% of their bookings came from new products.
Right. And the deals that included those new features saw a massive 40% uplift in annual contract value.
Which is huge.
It is. They now have over 5,200 customers spending over $100,000 a year.
Okay, but I do have to push back a little here.
Sure.
Because how on earth is Okta maintaining this kind of pricing power? We are talking nearly 82% gross margins.
Yeah.
When a behemoth like Microsoft offers MFA for free in its bundles, how do they not just get boxed out by free?
It fundamentally comes down to friction.
Okay.
When an IT admin tries to integrate a new app using Microsoft's identity tools, they often hit these huge roadblocks if that app is outside the Microsoft ecosystem.
Well, because Microsoft wants you in their ecosystem.
Exactly. But Okta's competitive edge is being completely vendor agnostic. They provide deep, out-of-the-box integrations that just work.
So an admin can connect a new tool in minutes instead of days.
Yes, which is huge for productivity.
Because if you tie your entire identity infrastructure to Azure and suddenly AWS or Google Cloud offers you a better cloud deal next year, you're paralyzed.
You literally cannot migrate.
Right. You can't migrate without breaking how your entire global workforce logs into their daily software. Okta prevents that vendor lock-in.
And that ease of use translates directly to adoption.
Yeah.
Before Microsoft recently mandated MFA, they only had about 34% adoption among admins.
Wow.
Okta had over 90% admin adoption before any mandates were ever issued.
That is a crazy gap.
Yeah, and if you look at the Gartner support rankings in the investor presentation, Okta outscores Microsoft 4.5 to 4.1. Enterprises are clearly willing to pay a premium for an independent, frictionless product.
Right, a product that doesn't hold their infrastructure hostage. So they have proven they can fend off Microsoft in the present. But, Wall Street is never satisfied with just the present.
No, they always want to know what is next.
And looking at these analyst notes from Wells Fargo, Citizens, KeyBank, they are all aggressively upgrading the stock based on Okta's AI security positioning. Wall Street is completely obsessed with what they're going to do with AI tomorrow.
And industry analyses from Goldman Sachs and Bernstein back up that obsession. They are projecting AI-related security spending to just surge.
But there is a fascinating disconnect in the management commentary this quarter.
Yes. It's super interesting. Management explicitly admitted that while their AI security products are gaining traction, they are not expected to materially impact the financials until 2028.
Wait, let me make sure I'm hearing this right.
Yeah,
This entire 19% stock surge, the massive cash flow, raising the full year guidance to over $3.2 billion, all of that is essentially pre-AI.
it is entirely pre-AI. Management is deliberately playing it safe. They stated their guidance reflects a cautious approach. Like, they're refusing to assume the macroeconomic momentum from the first half of the year will just automatically continue.
So they are absolutely not baking hypothetical AI windfalls into their current targets.
None whatsoever.
Which makes this quarter's performance even more remarkable. For anyone managing IT or deploying capital, the major takeaway here is that premium identity security remains a highly lucrative, incredibly sticky market.
Yeah, it is.
It is perfectly capable of shrugging off macro pressures and free bundled alternatives just by executing flawlessly on its core business.
It proves that execution in the core identity markets is more than enough to drive massive cash flow today, without needing to lean on future promises of an AI revolution.
So here is a thought to leave you with.
Yeah.
If Okta is generating this much cash flow and Wall Street enthusiasm right now, before their AI security revenues even hit the balance sheet, how much higher can their ceiling go when that 2028 AI wave finally arrives?
That is the billion-dollar question.
It really is. Make sure to follow the show for our daily deep dives into the latest earnings reports.